Alibaba has been an absolute roller coaster over the last 5 years. So in today's video, we're going to be taking a look at some recent news around the stock that could be very concerning for investors. We're also going to dive into their upcoming earnings announcement. So if you enjoy the video, drop a like down below and subscribe for more videos like this one. Recently, we have seen Alibaba's stock price run up by over 25%. It had previously hit a high of around $150 over the last 52 weeks. However, from that point, the trade war started to ensue and the stock dropped by over 30%. However, Alibaba is no stranger to volatility. We have seen the stock make massive moves throughout the course of the last year, moving from $70 per share all the way up to $120 per share, followed by a drop back down to $80 per share, and then another big move up to $150 per share. So this is a stock that a lot of investors have had to stomach volatility throughout the course of not only the last year, but over the course of the last 5 years. And a lot of this volatility over the course of the last 5 years has been outside of Alibaba's control. We have seen delisting concerns from the US. We have seen concerns around the Chinese economy as it has weakened significantly over the last couple of years. We have also seen the trade war develop. We have seen stimulus come into the Chinese economy. There's a whole number of things that has created this volatility around Alibaba's stock, and it really hasn't had to do with their performance. However, here on May 15th, Alibaba is going to announce their Q1 2025 earnings. And according to analysts on Yahoo Finance, they are expecting EPS to come in at $1.76. This would be up 26% from $1.39 of EPS in 2024. They also have a low estimate of $1.30 and a high EPS estimate of $2.19. One thing to point out is there's always a little bit of uncertainty around Alibaba's earnings. This has a lot to do with analysts not really understanding China and having a good idea of where companies are going to come in at because of the Chinese economy. And you can tell this from their numbers because the difference between the low EPS estimate and the high estimate is almost 90 cents. A lot of times the ranges, especially as you get closer to earnings, will start tightening up, and the fact that Alibaba has a 90-cent difference between these estimates is a little bit concerning, but it also allows the company for a lot of opportunity to come in and outperform analyst expectations. And that is something Alibaba has done 2 of the last 4 quarters. In June and December of last year, they beat analyst expectations by 10% on the bottom line. If they haven't been beating by 10%, then they've at least been coming in line the other 2 quarters. And for top line numbers, analysts are expecting Alibaba to get back to some solid growth. They're expecting year-over-year increases of revenue of around 7.56%, from $30.51 billion in 2024 to $32.82 billion in 2025. And in my opinion, I think Alibaba is going to put up very solid numbers this quarter. We have seen the Chinese government focused on how they can grow businesses within the country. And when you think about Alibaba, they do not have a whole lot of trade risk because their primary market is solely within China. They are not selling a ton outside of China, at least to the US. They're especially focused on the Southeast Asia market like Vietnam and other countries down there. However, they do have a little bit of risk with the US. There's no denying that. I just don't think it will have a huge effect on their business. The other big thing for Alibaba that they've been focused on is their cloud business. Last quarter, it grew revenue by 13% year over year, and their AI related products increased by triple digits year over year. However, that's not to say that Alibaba doesn't come without risks. US lawmakers are pushing the SEC to delist the company as well as a bunch of other Chinese companies. Lawmakers released a statement saying these entities benefit from American investor capital while advancing the strategic objectives of the Chinese Communist Party, supporting military modernization and gross human rights violations. They also pose an unacceptable risk to American investors. This has always been a risk with Alibaba, and it's certainly a concern that investors have to have when they enter a Chinese company. However, I believe that this risk is over-exaggerated by the market. We could see it move down in the short term, Alibaba's stock price. However, I think over the the coming months, we will see some sort of deal between the US and China. Beijing has already released a statement saying they are evaluating an offer from Washington to hold talks with President Donald Trump. And I personally believe that both countries benefit from more open trade. We could see that Alibaba over the last couple of years has been hurt significantly by declines in the Chinese economy. They have just recently got back to trailing 12-month revenue that is sitting at a record level. As of last quarter, they hit $136.1 billion of trailing 12-month revenue. Their previous all-time high for trailing 12-month revenue was back in 2022 when they hit $134.5 billion. And I think Alibaba over the next couple of years could see some consistent growth of around 7 to 12% for their top line numbers, especially as we see the Chinese economy start to turn around and the Chinese government focus on growing their businesses within the country. However, the most important thing for Alibaba's upcoming earnings announcement is how their bottom line is doing. Right now, their trailing 12-month EPS numbers are sitting at $6.96. That is still down significantly from their all-time high of $9.37. However, if they can start building solid quarter after quarter results, that should start driving up their bottom line. And they're also taking aim at improving their EPS numbers by reducing their shares outstanding. In 2020, they had 2.767 billion shares outstanding. However, today, as of their most recent quarter, they had 2.403 billion shares outstanding. And over the last 3 quarters, they've consistently decreased their shares outstanding by around 5% year over year. And if they start growing their top and bottom lines more quickly than they have over the last 2 to 3 years, we should start seeing expansion of their valuation. Right now, their forward P ratio is sitting at a 12.29. If we were to simply see their valuation expand to a 20 forward P ratio, that would result in a stock price of $205 per share. That would be a massive move up from the current share price of around $126. And ultimately, that is why I own Alibaba in my portfolio. They have the opportunity to grow their top line and their bottom line significantly. They also have significant opportunity for valuation expansion, which provides a lot of upside potential. Right now in the YouTube portfolio, we have a total value of $60,099.59. And Alibaba is our 9th largest position. We currently only hold 15 shares in this portfolio. I do have a much larger personal portfolio that has well over $20,000 invested in Alibaba. However, in this portfolio, the market value is currently only $1,800, up around 62%. I certainly thought about investing more into this position when the stock was trading around $100 just a few weeks ago. However, I primarily focused on building out a couple of other positions, especially Google, adding a little bit to Super Microcomputer, as well as building out Microsoft, AMD, and Adobe more recently. And on top of those positions, I hold Visa, SoFi, PayPal, Palantir, and Apple. One stock that I'm looking at potentially adding more to is SoFi. They had an outstanding earnings report in the last week. If the stock were to dip to around $10 per share, I think that would be a very nice entry point. And right now we have plenty of cash that we can deploy into the market, sitting on around $16,000. But of course, never buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you call someone who raises hens? Check the comments down below for the answer. Thanks for watching.